The broadcast is now starting. All attendees are in listen-only mode.
Well, hello everyone, and welcome to Westmark Trading Presents. My name is George Pappas, and I will be your moderator today for what I know will be a solid educational experience for all of us. And to this point, I'm pleased to share that we have two great speakers with us here today, Bennett McDowell and Dan Cook. Now, each of these gentlemen have prepared a unique presentation that is designed to leave us with at least a couple of fresh new ideas on ways we may want to consider trading and investing in the markets. But before we get started, there are a few housekeeping items I need to cover with each of you. First off, all of today's presentations are being recorded, and everyone that registered for today's webinar will receive a link to these recordings in the next day or so. Our presenters will address any questions you may have during the pauses in their presentation or at the end. Please type your question in the question panel, and we'll feed these to the presenter when requested. And lastly, you may want to put your webinar display in full screen mode for the best viewing experience. And with that, let's get to the reason that we're all here. The bulk of today's presentation will be given by Bennett McDowell. After him, Dan Cook will speak for a few minutes, but we're here to make your psychology work for you and not against you. And Bennett McDowell is the founder of Traders Coach and has taught his applied reality trading to investors and hedge fund managers in over 80 countries. In today's presentation, he'll be sharing how to find the keys to unlocking your unique psychological strengths, how your senses can deceive you and distort perceptions of reality, and you'll learn to step outside the matrix of fear and greed to make them work for you and train yourself to use proper visualization tools. And with that, please join me in welcoming Bennett McDowell to our webinar.
Okay, George, thank you so much. Go ahead and make me a presenter. Great, okay, and then I'll go ahead and show my screen. Give me 1 second, we'll get all set up.
Sure thing.
All right, you should see that. I'm going to also use a webcam, folks, so you'll actually get to see what we look like over here. All right, there we go. Well, it's great to be here. And George, thank you for that nice introduction. And Dan, great to have you here as well. Nice to meet you. And we're going to have a lot of fun over the next hour. We're going to talk about psychology. It's an often neglected area in trading. You know, so many people focus on trading entries and exits, but psychology really plays an important part of being successful in this business. We've been doing this now for a good 20 years. And I got to tell you, we've been able to help traders literally around the world, whether they trade the Forex market, stocks, ETFs, futures, bonds, whatever they trade, whatever time frame. Again, the approaches we're going to teach here in the next 45 minutes are really going to help you in the style of your trading. So it all comes down to structure and eliminating emotional trading. So we're going to have fun. I'm going to ask you a lot of questions as well. But before I get going, just a quick disclaimer issue here. We always want to tell everybody that there's risk in trading. But, you know, without that risk, there's no opportunity. I always say that. So the two go hand in hand. Just understand risk control, understand market risk and trade risk, and realize that every time we enter the markets, please have a protective stop in place. All right, well, we want you to also come by and visit our website at traderscoach.com. We have a lot of free information there, so feel free to stop by at any time. We have videos and all sorts of things. We also have a variety of different books available at Amazon. We have a Trader's Money Management System, The Art of Trading, Survival Guide for Traders, Elliott Wave, to name a few. And the fun thing about Amazon is you can read all the reviews. That's what I always like, so definitely check us out. All right, but today's focus, psychology. All right, so let's get into it. And before I do also, I want to offer a free psychology chapter here for you. And I'm going to put that link up in the chat area. So go ahead and click on this. And basically, in this report, it's a segment from a book I wrote on psychology. And it talks about some of the various things you need to do to get in the right mindset, which we call the trader's mindset, in order to trade the markets properly. So we want to give you that free. We talk about some destructive psychological issues and their causes, so you can go through that list and see if there's anything that applies to you so that you can adjust that and fix it. So that's all good stuff, and that's available free. We'll keep that link active for the duration of today. Now, how many out there have experienced stress, worry, fear, greed? Because all that stuff really can hamper your trading. And so we want to really talk about that. And, Warren Buffett even talks about emotions in the markets. He talks about, you have to be able to control yourself. You can't let emotions get in the way of your mind. And he's so very, very right, because if traders improperly manage psychology can manifest losing trades even with a proven trading system. So let me ask a very direct question to the audience out there. Do you find emotions interfering with your trading? How many out there are having an issue with your emotions, and maybe they are sabotaging your trading? Because I'm sure a lot of people have that issue. And it's going to be, every time I ask this in an audience, it's always yes, of course. What's interesting is that, think back when you first started trading. I know when I didn't even have a clue as to how psychology came into play with trading. I just thought you entered and exited the market, and if you had money, you put it in one thing and it would do well. But you know what? When you start doing this business for a while, you realize you almost become your own worst or best enemy or friend, okay, when you trade the markets. So yes, you're trading against other people, but I also firmly believe you're trading against your own psychology, which is why it's so important to have that psychology honed. All right, now, let me ask another question. How many have had trouble actually getting into a trade when their system is generating an entry? We call that pulling the trigger. How many people have had trouble with that? If you're having trouble with that, it's usually fear that's causing you having that trouble. And I'm going to talk a little bit about how fear can come into your trading and really cause problems with it. It comes under the situation of you're always trading your last trade instead of trading the statistics of your trading approach. So if you're right 60% of the time and your payoff ratio is at least 2 to 1, well, heck, you're going to be winning 60% of the time, which means losing 4. But if you're careful with your risk control, that's a winning approach, but you're not going to be winning all the time. If you have that mindset, okay, you're going to have great structure and you're going to be able to continue even when you have a few losses. But what happens with the other mindset is that if you're always trading your last trade and that approach, let's say you got out of the market and then the market took off, and so now you're all mad that you got out because your stop took you out. So the next time you trade, it hits your stop, but you say, hey, I'm not going to get out this time because the previous trade I did and it didn't make me money. And then, of course, when you don't get out, that's when the big losses come. So that's what we mean by trading your last trade. We don't want you to do that. And that is one of the first things you can do to actually increase your results is trade with a tested system so you know exactly to stay the course. Very important. All right, now, how many of you gotten out of trades too soon? And this, again, is a fear issue. It's one thing, being in a profitable trade can be just as stressful as actually being in an unprofitable trade, believe it or not. Okay? So there you go. All right, now, how many people hop into trades without really fully analyzing them because of something they hear on the news, or maybe we call that greed, but it's more of an impulse versus an analysis. All right? There used to be, and she's still around, the Money Honey, from CNBC. She could make anything sound phenomenal. And I remember, if I'm going back 20 years ago, when when television, CNBC was really hot back then, the Financial News Network, CNBC. But the idea was that, anytime they would come on with something, they'd hype it up. And if you weren't careful, it's very easy to get seduced into that jumping in type of feeling. So you want to have structure to keep you from doing that as well. All right. Now, finally, the question also is, do you feel stressed? Are you feel stressed at the end of a trading day? How many are feeling stressed out there? And I'm sure many, many of you are feeling that way, especially if you're day traders. All right. And a lot of times you're feeling stressed out because of a lack of structure. And it's playing that emotional ping pong game going from, fear to greed all the time. All right, so that's an important thing we want to work on as well today. Now, I want to ask everybody out there, and feel free to type this in. What is the most destructive emotion you personally feel when trading? What's the most destructive emotion you feel while trading? Is it fear? Is it greed? Is it lack of patience? It's interesting because a lot of people will say fear, and that's what I'm seeing right now. Fear is a very, very potent feeling. I think it's a little bit more in terms of the greed issue, and shame. Shame is a good one too. A lot of times when we make a mistake or get out or do something wrong, we feel ashamed. Absolutely. Now, what I'm going to show you next is kind of interesting because even though we talk and separate fear from greed, the two are really kind of also intertwined, almost like they're married, because greed can have an element of fear in it. And that fear is you're missing out on the trade. And the greed is I need to get into that trade. And the fear is if you don't get into the trade, you're going to miss it. So they're kind of married a little bit, all right? So instead of kind of compartmentalize them, I want you to think of them as nothing but emotions. Try not to label them too much and be able to spot these emotions in the market. And what we want to do is spot them and exploit them. And that's hopefully what your trading approach is doing, because emotions can create, increased volatility as people are going back and forth deciding what to do, or maybe a news event comes out and you see that price bar swing way up and down as it's digesting it. So it can create pivot points in the market, fractals, and we can kind of get an idea of what caused that. Was it a fear or a greed situation? All right, so the next thing we want to talk about a little bit about in order to get to you and your personal psychological makeup is we want to talk about, where are we now? Okay, personally, where are you now personally? All right, I'm going to read a couple things and you don't have to type anything in, but just listen for a minute. So as I read these questions, kind of keep a track on what may apply to you and what may not. So do you feel anxiety and stress when you trade? Are you working harder but still losing in the markets? Do you feel wound up at the end of the trading day? Does the market feel like a hostile place to you? Are you failing to execute your trading signals? Are you constantly searching for a trading system? And finally, are you constantly losing? So think about those questions for a minute. Answer them in your head or write them down, whatever you want to there. And I want you to think about some of the goals for you to develop in order for you to have a trader's mindset. You want to successfully trade, obviously. But, once you have a trading approach, a set of rules, you can apply those to really any market and pretty much any time frame. So you actually can work less and make more. And you can also do that by just increasing your profitability, which will also increase your trading account size. So if you're using the same approach, but you have a larger trading account, well, you're going to make more money without increasing the amount of work. All right, so that's what we call work less, make more. Approach the markets calmly and stress-free. I'll tell you something. Actually, when you get good at this business, all right, it can actually be a little boring because you're so structured that nothing really derails you and nothing overexcites you. All right, you're making your decisions based on a good objective approach. And it's not necessarily boring, but you don't get the thrill like you would think you would get if you went to Las Vegas and put it all on the table, so to speak. Because a lot of people, when they trade, they need that feeling. And we don't want you to have that feeling because in good trading, you need to stay objective and keep your emotions out. All right, so definitely you want to approach the markets calmly and stress-free. So if you're doing that, that's a good sign that you're headed towards what we call the trader's mindset. So you want to avoid destructional, emotional trading triggers such as fear and greed. You don't want to be thrown around by fear and greed. You want to exploit that instead. All right? Be calm and confident and basically not only enjoy trading, but enjoy your life, okay? If you're so stressed out from trading that you're not enjoying your life in general, then something's got to change. So when you develop the trader's mindset, you're going to be basically feeling these main points here that we just went over on that slide, all right? So you're not going to be successful at this business unless you develop the trader's mindset. It's really important because psychology is pretty much everything. It's the glue that holds everything together from risk control to entries and exits. All right, now I want to talk a little bit about some factors that can affect your psychology. All right, so there's three significant ones we're going to cover. We're going to cover visual perception, and one of the questions we want you to be thinking as we show you some visual examples is, what's the illusion, what's the reality? Two, we're going to also discuss some emotional perceptions. Now, emotional perceptions are built upon your mood, all right? Are you fearful, scared, or optimistic type of person? Or maybe you had a bad day that day. How many people have had a bad day, throws them in a bad mood, and it does affect your trading? Okay? All right, so think about that. Your environment, okay, your past, the way you grew up, and your present. I'm going to give you some examples of that as well. All right, so let's first focus here on visual perception. All right, I start out by saying our minds are capable of more than we realize, and boy, is that true. All right, and these visual examples are going to illustrate how our minds can actually conceive and create illusions we may not even be aware of. So I want you to look at this diagram here for a moment. All right, reality or illusion here. Whatever the case may be, our brain has a nasty habit of playing tricks on us, bending objective reality into the subjective. If you took a ruler on all these lines, they're all straight, both horizontal and vertical. Okay? But they don't appear that way. And that's the trick that your mind can play on you without even realizing it. So think about that. All right? When we look at something, are we really seeing an illusion or reality? And we're going to get to how this can affect us in trading as well. I want you to look at this one. Focus on the woman's nose for about 15 seconds, maybe 20. Just focus. And then look to the white to the right, the whiteboard on the right. What do you see? What do you see? So focus on the woman's nose, then look to the right. A face, right? So when I do this, I actually see a woman with dark hair, okay, and a very, almost like a clear picture. Now this is all going on in the background, okay, of your mind. This is not something you're consciously trying to do. This is what we have to realize when we do things and look at things, that there's a lot going on that can really cause us to have illusions. All right, let's go on. Here's a fun one. Count the black dots. This one will drive you crazy. Count the black dots. Every time you look, they turn white, right? That's kind of a fun one. Again, just another example of how our mind is doing stuff behind the scenes. All right, so as a summary on those visual, now those are visual illusions. So as a summary on that, it's an example of how our minds can conceive and create illusions we may not even be aware of. And illusions may be visual or may be created subconsciously by emotions created by beliefs. And we haven't talked about that, but we will in a minute. So one of the important things in getting the trader's mindset and getting your psychology in tune with trading is to learn to control these powerful illusions created within and realize that they exist. And we're going to come up with some other ideas in just a little bit. All right, so now, since visual examples illustrate how our minds can conceive and create illusions, the next question obviously we want to ask is, are you seeing the markets as it really is when you look at a chart? So let's look at a chart. All right, we'll call this chart A. All right, now, does this generate much emotion for anybody out there? What's your feeling on this? Regardless of your trading system right now, just what's your feeling on this? Purely emotion. Kind of boring, right? It's a market that's really going sideways, right? Everybody agree? Okay. Just kind of drifting sideways. Choppy market, right? All right, now what about this market? Does this create more emotion? Okay. So let's go back again. Let's go back to the other market. Calm market, not much emotion, right? Choppy market, or perceived choppy market, more emotion on this one. Guess what? They're the exact same market. The only difference is I screwed around with the price axis and zoomed in a little bit. So the next thing you've got to ask yourself is, when you're looking at charts, all right, do you have them displayed in such a way that maybe is creating more emotion than appropriate? And the problem with that is, if you're not using a trading system, the emotion created just simply by looking at the same chart but differently in terms of zooming in or not, all right, may create a feeling of greed or fear. Okay? So I want you to keep that in mind. This is another reason why a trading approach, a set of rules, a system that you apply over and over again, all right, if you're using it, it doesn't matter what the chart looks like, because you're going to get entries and exits because it's the same market based on the same chart, provided you have the same amount of history loaded, right? But if you don't have a system, you may trade those particular markets totally different because of the emotion that they generate. So that's another plus for why we have to have structure in the form of trading rules when we trade the markets. All right, now I want to discuss the next type of perception that we carry with us, and that's the emotional perception. All right, so I want you to just write down, without thinking, write down the animal which best signifies the market to you. Write it down. I don't care really what it is, but if you want to share it, that's fine. But don't think too much. All right. Now, your answer is going to tell you much about your beliefs about the market. Basically what we're doing here is we're going in without thinking about what we're really looking for, and you're getting a very primal feeling of how you feel about the markets. So are you creating artificial fear and greed caused by inappropriate trading responses based on how you feel about the market? If the market is threatening or tricky to you, you will most likely choose an animal that could hurt or deceive you. Maybe like a lion, a tiger, a snake, I don't know. Whatever is fearful for you. Everybody's different. The main thing is the animal you chose one that could hurt you or deceive you? Or, okay, is it something friendly? If the market is a threatening and hostile place, you will trade from a fearful mindset. And what does that mean? It means you're going to have a hard time pulling the trigger. You're going to have a hard time staying with the trade, because you're always going to feel that even in a profitable trade, even with the stop in place, you're always going to move that stop up closer and closer and closer, okay, until you're taken out of a perfectly good trade that has a lot more room to go because of fear, okay, because of fear. All right, so the usual outcome, which is our next paragraph here, the usual outcome of trading from a fearful mindset producing emotional trading, and usually the fearful traders exit the market too quickly or cannot pull the trigger at the right time, and of course lose money. All right, if the market is a fun and safe place to you, then you will most likely choose an animal that is non-threatening to you, like a teddy bear or a favorite pet or whatever. However, you got to be careful in this extreme as well, because if you feel the market is totally just a play place, then this can lead to a lackadaisical, unstructured trading approach, leading to poor risk control and eventual loss. So the point is, you want to be somewhere in between. You want to have respect for the markets, but you don't want to fear it. It's kind of like, if you're on the ocean in a boat, you want to have respect for the water, but at the same time, you want to be able to enjoy it too. Okay, it's that type of thing. All right. So fear, we have found out, is usually the reason most people never leave their comfort zone as well. So usually what happens in a fearful mindset is you stay in your comfort zone and you never get or grow out of it to reach where the magic happens, is what we have on this particular slide. So you got to be careful of fear, okay? It's false evidence appearing real. I think that's a great way of looking at it, because it's all relative, all right? Real versus false both create emotions. You can have real fear. If you're getting chased by, a bear in the woods, hey, that's real fear. You better run. But there's a lot of fear that we create on ourselves where we assume the worst case scenario on something that hasn't even happened yet. And you got to be careful about that as well. So you need to learn to distinguish between real and false fear in the market and in your life as well. All right. So fear is an illusion of what we feel is threatening. So think of it like that. I think that's a very powerful saying. I'm going to repeat it. Fear equals an illusion of what we feel is threatening. So ask yourself right now, or next time you feel fear, is it real or is it not? And I think you know what I mean, because there's a lot of times we get ourselves in an emotional misfit based on fear that really hasn't occurred yet. Okay? All right, couple things, all right? You need to learn to stop the fear. And if you think about it, there's a couple of professions out there, careers, where the practitioner actually has a lot of right to be fearful, okay? Samurai warrior, combat fighter pilots, race car drivers, they face real fear all the time. Traders face real fear of going bankrupt or bust or losing all their money. But what is the one thing that these folks have in common that they do in order to combat fear? Take your time on this. Think about this. Think about it for a moment. Anybody want to take a stab at it? What do you think that these four type of professions have in common where they're able to actually conquer how they handle fear? They know their job, absolutely. Okay, a plan. Practice. How about practice? Practice, practice, practice. The samurai warrior, okay, who practices all the time and actually gets into a fight, doesn't have to think. In fact, they call it no mind, and they just react because they can, because of all the practice. Combat fighter pilots, practice, practice, practice. Not only in a real jet, but also in a simulator. Race car drivers, same thing. And with the technology today, they have simulators as well. Traders, guess what? We're lucky because we can have simulators too. So the idea is that, think of how foolish it would be if a combat fighter pilot in a simulator crashed every time. Do you think he would be good to go out in actual combat? No, he's not ready yet. How about a trader? Do you think a trader that consistently has poor results in their test account or simulated account is ready to trade the financial markets with real money? No. okay? But I can tell you, all right, this is how you got a handle on fear. Once you practice enough to where you have an edge, then going into the real markets, you're not going to have to think much about it. You're going to protect yourself automatically with risk control. You're going to know when to enter and when to exit the market based on a set of trading rules you've tested. You've got the structure, so no matter what the market throws at you, you know what to do. And if you don't, you have a stop in place that will take you out before it gets bad, and you'll learn from it. All right? So most people starting out in trading do not have structure, and they jump into the markets thinking they know what to do when in fact they don't. And when you jump into the markets like that, you're pitted against professional traders, intermediate traders, but the point is there's no amateur league in the markets. So you don't have the luxury of necessarily learning unless you're willing to lose money. And so this is where practicing your trading in a simulated account and working on becoming profitable before actually risking real money goes a long way in building your confidence and facing the markets with reality. All right, now one more thing I want to cover here, we're almost done, is a little bit on beliefs and thoughts. All right, there's a relationship between our beliefs, thoughts, attitudes, and behaviors. Thoughts and ideas. Thoughts are kind of subconscious. They go through our mind all the time. We have thousands of them a day, right? All right, but most of them don't really have any power over us because we haven't energized them. Okay, so when we energize some of our thoughts, those are the ones that usually have meaning for us. So I'm going to read this. Thoughts, subconscious and conscious, going through your mind, but none of them have any power except those that are energized by emotions. Now, beliefs. A belief is an energized thought that you make real or accept as true. Unfortunately, however, some beliefs may not be based on the current reality. All right, there could be beliefs out there that some people may believe money is evil. Okay, maybe they were brought up that way. And so they go into trading and they can't figure out why they're losing money because they're in a business where making money is your scorecard. And yet they feel money is bad. So right away, their belief structure is totally against what they're trying to do. So my point I'm trying to get through is this, is that, all right, you have to have your beliefs and thoughts in line with what you're doing. Your attitudes, which is the next one. All right, beliefs can create our attitudes and can influence our actions and reactions. And behaviors are the result of beliefs, thoughts, and attitudes set into action. Emotions that are attached to our thoughts thus ultimately creates behavior. So let's think about something here. I'm going to go to the next slide here. Let's think about how this can affect your trading. As a trader, let me ask you a question. How much emotions do you attach to losing and winning? Who attaches more emotions to losing? Say yes. That's very common. Most people will answer that. How about winning? Okay, now let me ask you a question. If you focus or attach your emotions to losing more than winning, where do you think your mindset's going to be? Not too good, right? You're going to feel shame. You're going to be fearful. You get the picture? All right, learn from your losing trades, but don't get stuck in them. And that's what attaching emotions can do. It can get you stuck in that area where you're thinking about how bad you are, how bad it was, and so forth. Pretty hard to be profitable once you go down that particular spiral, right? So I want you to focus and be happy about your winning trades as much as learning from your losing trades, but try to put more energy into what you feel like and focusing on the winning trades, okay? And see if that doesn't help you. I think you'll be surprised. Your core beliefs, okay, about yourself. Do you perceive yourself as a winner or a loser deep down inside? Money. What's your core belief on money? Good or bad? Trading. Is it possible? About success. Do you deserve it? If any of these core beliefs aren't in alignment with what you're trying to do here as a trader, then this is where you face self-sabotage, and you have to work on these issues that may be holding you back. Okay? Really important. So this is why we say, some people will say, geez, I just don't understand why I'm not doing well. Chances are, it's not because you're stupid. It's because your core beliefs aren't in alignment with success. All right? Environment. Let's talk a little bit about this. This is our final area. All right? Your environment, of course, will impact your belief system and your thoughts. Think about your past and how that influences your current beliefs now. I had one client that I was coaching where he grew up in a household where his family basically thought if you didn't have a regular job like, IBM or something like that, and got up at 9 and came home at 5 or whatever it was, excuse me, that if you didn't have that type of normal job, it didn't count. So being an entrepreneur or a trader, that's not what we do. All right. They were going against all their core beliefs that their family taught them. And so they had to reassociate the belief about what they were doing now as being good and what their parents said was really not effective and not accurate. Okay. But until they realized it, because a lot of these things go on in the back of our mind, but until we change and realize it, you can't fix it. Sometimes just realizing it fixes it, okay? All right, think about your present and how that influences your beliefs currently now, okay? Are you in a good relationship, bad relationship? Are things going good at home or not? Think about that. How's your health, okay? So the result of all this is we have our own unique maze of issues and good things, all right? So your job really needs to assess yourself. You need to assess yourself and work on some of the areas that is holding you back and let the areas that you're strong in flourish. Now, one other thing I like to do here is talk about the proverbial half glass is full. Now look at the glass, okay? Taking all this into account right now, we ask you, is the glass half full or half empty? Is this a visual illusion or a belief illusion? Optimism or pessimism? It's a little bit of both. So when you look at a chart, okay, both the visual perception of the chart, your belief system, both based on past and present, will determine if your glass is half full or half empty. And every one of us has the ability, okay, to change. So if you don't like what you're seeing, you can change that. And it will affect your trading if your belief system is not in alignment with you doing well successfully. So, as a summary here, our minds are more capable than we realize. I think we've been able to show you during this brief presentation how that's so. All right, your mind, again, is creating illusions you may or may not even be aware of. Illusions may be visual or may be created subconsciously by the emotions created by beliefs. So now, since you've been through this presentation, at least now, all right, you may be more able to spot what's going on in terms of what you're feeling from illusions versus reality. All right, are emotions such as fear distorting what is real and how you interpret and act in the market? Okay, is fear causing you a problem in the markets? Is greed causing you a problem in the markets? Are you jumping in without analyzing properly? Do you not have any structure in the markets? All right, if you don't have any structure, then you're giving a green ticket to both fear and greed to run your life. Has your mind sees interpret markets maybe affecting your trading without you even being aware of it? I think we've covered that. All right. Do you think now, going forward, that it is important to learn skills to control your emotions and identify distorted illusions, both visually and emotionally, before they sabotage your trading? You betcha. Okay. That's the whole purpose of today, is for you to get to that point where you can avoid things sabotaging your trading. Okay. All right, let me just open it up real quick to some questions here. I've got some coming in here. Vincano, how are you? Okay, I usually go through mazes with a bulldozer, though admittedly some walls are made. Well, whatever works for you, but as long as when you bulldoze the maze, it doesn't grow back. Okay, I think that's the important part. All right, your current belief is not aligned with reality. Is this what you said earlier? I want to remember it. Yeah, that's part of it. Sure, Al, absolutely. If you see a belief, all right, that is based on something you learned in the past and it's not in alignment with what you're trying to do in terms of be successful as a trader, all right, then you've got to find out where that belief came from and if you can change it, because if you cannot change it, it's going to be very hard for you to be successful in this business. All right. Okay, let's see here. It looks like the sound cut out. We got sound back? Looks like the sound cut out for a minute. Okay, good. Thanks. Wasn't out long, was it? Hopefully not. That does happen sometime. Okay. So did everybody hear my answers to the questions? Okay, good. All right, excellent. All right, so I'll just wrap up by a few kind of interesting sayings here. All right, this is one I think we've probably all heard throughout our life, but it's so true. Winners are not people who never fail, but people who never quit. You know, I got to tell you, 80% of everything I do, I fail. But I make a pretty good living on the 20% I do right. And I think the idea is you can't quit or else you'll never get to that 20% that you do right. Okay? So your next step here, really at the end of this, is to download. We put the link up there. Download the free report. Take a look at it. I think it's something you can start working on at home on your own. And there's some things in there that are going to help you really break through those barriers that are holding you back in terms of psychology. Well, it was my pleasure to be here. I want to thank everybody. George, thank you for having me. Great to be here. And I'm going to turn it back over to you in just a moment. But I hope everybody got quite a bit out of this because, again, psychology is not really a sexy topic with trading. But I think I commend everybody for being here, and I certainly think that unless your psychology is in alignment with what you're trying to do, all right, you're going to have a real hard time being successful. So you can change that, and you can get it in alignment, and once you do, it's going to make a huge difference in your trading. So thanks very much for having me. Visit our website anytime, traderscoach.com, and it's great to be here. All right, I'm going to turn it over to you, George. Thank you.
Awesome. Well, thank you so much, Bennett. I'm actually going to turn it right over to Dan, and Dan's going to hop in here and give us a little bit of a follow-up on that great presentation.
Sounds great. Thanks, George. And thank you, Bennett. That was an excellent presentation. Excellent topic. I'm waiting to get the screen here. I just, Bennett said psychology might not be a sexy topic, but in my opinion, it is such an important topic. So often I see people getting into the markets and almost without fail, the first thing they want to do is learn a strategy, and they think a strategy will save them. I know that was my conception or perception of the market was, gosh, if I just knew what indicators people were using and what time frames that I could be successful, and it really has nothing to do with that. It is really all about your psychology, your risk management, and such an important topic, and really want to thank Bennett very much for that presentation. I'm just going to wrap it up here just with a real quick thing on Nadex. I'm so happy to sponsor this in conjunction with Westmark. I've been around the markets for about 20 years, and it is so important just to get education. We were talking a little bit before we started the presentation, and we just see that the probability of success for traders that take time to really learn, really not just about the markets, You know, we always look at the market as a puzzle that can never be solved. The biggest puzzle to trading is really within ourselves, and I think Bennett did a great job of doing that. And then when we can learn about those factors as well as the, you know, the basic skill sets in the market, we just have such a better probability of success. So I'll just hop through this real quick. Let me make sure I've got the questions up here. But really, I'd much rather have you still focus on what Bennett was saying, and I'm just going to give a brief introduction to Nadex. And real quick, we covered a risk disclosure already. Trading involves risk, right? You put money into a market, you can lose that money. It doesn't matter if you're trading stocks, futures, Forex, Nadex, all great markets, all involve risk. So real quick, for those not familiar or haven't heard of Nadex, Nadex is the North American Derivatives Exchange. We're based in Chicago, regulated by the Commodity Futures Trading Commission. Where we're unique is we're designed for the individual trader. And what I mean by that is that we were really founded with this goal of providing fair market access in a sensible manner. And I'll talk about what I mean by sensible manner. Whether you be a new trader or an experienced trader, no matter your level of risk capital. One thing I'll point out in that, it needs to be risk capital. That goes a long way towards psychology. If you're trading with grocery money, you will never be successful. So when I talk about sensible, how do we do this? How do we open up the markets? Well, one way is the low cost of entry. The next are smaller contract sizes on the most popular markets. Now, one of the things that I'm most proud of is that in providing access to the markets and doing it sensibly, I know when I got into the markets, I had to jump pretty much into the big leagues right away as far as contract size. One of the biggest downfalls I see, and it goes back to psychology as well, is traders being undercapitalized. They look at day trading margin in the futures market and say, hey, I can do that. I can put up my $500 for the E-mini S&P, or I can put up my $1,200 for a contract of oil. But they need to really look at the markets. And so if somebody wanted to go to the CME and trade one contract of crude oil, that's $1,000 per point gain or loss, right? That's a lot of money, requires a lot of capital. So what we did was we looked at the popular markets, stock index futures, commodities, currencies, really said, well, how do we create contracts, smaller contract sizes without leverage where you don't have to ever worry about a margin call. You can never lose more, not only more than you have in your account, but more than you put up on a trade. And do that with a low cost of entry and give people access, but do it sensibly. I really cut my teeth in the Forex world when it was particularly high leverage, 100 to 1, even 200 to 1, 400 to 1 in some cases. Vast amounts of leverage, and people just got crushed. I look back on those days and I wish I would have known better at that point 20 years ago about what I was talking about. Not that it would have helped though, because the market's moving when you're employing a lot of leverage, and even if you have a stop there, there's no guarantee that that stop will get filled where you put it. Anybody that remembers a few years ago when the Swiss National Bank pulled the peg from the euro,